Hi students, welcome to my channel Economic Lectures. In this video, we will be discussing about the topic marginal efficiency of capital. As we all know, MEC or marginal efficiency of capital is an important topic when it comes to the perspectives of macroeconomics. So today we are discussing about marginal efficiency of capital. So what is that? MEC refers to the expected profitability of a capital asset. So what is MEC, marginal efficiency of capital? It is the expected profitability of a capital asset. അതായത് ഒരു ക്യാപിറ്റൽ എന്ന് പറയപ്പെടുന്ന ഒരു വസ്തുവിൻ്റെ അല്ലെങ്കിൽ അത്തരത്തിൽ ഉപയോഗിക്കുന്ന ഏതെങ്കിലും ഒന്നിൻ്റെ പ്രോഫിറ്റബിലിറ്റി, ദാറ്റ് ഈസ് ദ സ്കോപ്പ് ഓഫ് ദ അവൈലബിൾ പ്രോഫിറ്റ് or the amount of profit that we can get from a capital. It is termed as marginal efficiency of capital. It displays the expected rate of return on investment at a particular given time. What does MEC shows? MEC എന്താണ് സൂചിപ്പിക്കുന്നത്, കാണിച്ചു തരുന്നത്? Expected rate of return on investment. If we are making any sort of investment, we know that the investment in the sense that we are investing in capital. So what is the expected rate or rate of return on investment? നമ്മൾ നടത്തുന്ന ഇൻവെസ്റ്റ്മെൻറ്റിൻ്റെ മേൽ നമുക്ക് ലഭിക്കുന്ന റിട്ടേൺ എത്രയാണ്, അതിനെയാണ് എന്ത്, അല്ലെങ്കിൽ ഒരു നിശ്ചിത സമയത്ത്, അതിനെയാണ് what we call it as MEC. It may be defined as, we are going through many sort of definitions. It may be defined as the highest rate of return over cost expected from the marginal or additional unit of a capital asset. For example, if we are considering a particular investment and if we are adding more investment, we call it as marginal investment or the investment that we added. So what is MEC? It is the highest rate of return over cost. Every investment will have a cost, and over the cost what we get is we term it as return, the highest rate of return. So MEC is the highest rate of return that we can expect from the marginal or additional unit of capital asset. So this term, that is marginal efficiency of capital, was introduced by John Maynard Keynes in his general theory. ജോൺ മെയ്നാർഡ് കെയ്ൻസ്, JM കെയ്ൻസ്, അദ്ദേഹത്തിൻ്റെ പ്രശസ്തമായ ജനറൽ തിയറി എന്ന പുസ്തകത്തിലാണ് എന്ത് MEC, മാർജിനൽ എഫിഷ്യൻസി ഓഫ് ക്യാപിറ്റലിനെ കുറിച്ച് പറയുന്നത്. അതെങ്ങനെയാണ് കാൽക്കുലേറ്റ് ചെയ്യുന്നത്? ഇറ്റ് ഈസ് കാൽക്കുലേറ്റഡ് ആസ് ദ പ്രോഫിറ്റ് ദാറ്റ് എ ഫേം ഈസ് എക്സ്പെക്റ്റഡ് ടു ഏൺ കൺസിഡറിങ് ദ കോസ്റ്റ് ഓഫ് ഇൻപുട്സ് ആൻഡ് ദ ഡെപ്രിസിയേഷൻ ഓഫ് ദ ക്യാപിറ്റൽ. അപ്പോൾ അതിൽ വ്യത്യസ്ത കാര്യങ്ങൾ നമ്മൾ ഇതിൽ കൺസിഡർ ചെയ്യുന്നുണ്ട്. ഇറ്റ് ഈസ് കാൽക്കുലേറ്റഡ് ആസ് ദ പ്രോഫിറ്റ് ദാറ്റ് എ ഫേം ഈസ് എക്സ്പെക്റ്റഡ് ടു ഏൺ. അപ്പോൾ MEC നമ്മൾ എങ്ങനെയാണ് കാൽക്കുലേറ്റ് ചെയ്യുന്നത്? ഹൗ ഡു വി കാൽക്കുലേറ്റ് MEC? ഇറ്റ് ഈസ് കാൽക്കുലേറ്റഡ് ആസ് ദ പ്രോഫിറ്റ് ദാറ്റ് വി എക്സ്പെക്ട് ടു ഏൺ. ഫോർ എക്സാമ്പിൾ, ഇഫ് വി ആർ ബൈയിങ് എ മെഷീൻ, the machine might run its complete form for 10 to 15 years. After that we might have to replace. So how we calculate MEC? MEC എങ്ങനെയാണ് നമ്മൾ കാൽക്കുലേറ്റ് ചെയ്യുന്നത്? What is the expected return that we get from that machine, or how much profit does the machine gives in its lifespan or in its 15 years of life, considering the cost of inputs and the depreciation of the capital. When considering the profit from a capital, we also consider the cost. How much cost did we spend for that machine? ആ മെഷീന് വേണ്ടി എത്ര രൂപയാണ് നമ്മൾ ചിലവാക്കിയത്? Also the depreciation of the capital. Every capital will have depreciation, as we all know, or its value will be decreasing year by year due to tear and wear. That's what we call depreciation of the capital. It is influenced by expectations about future input cost and demand. It is influenced by, പ്രധാനപ്പെട്ട രണ്ട് കാര്യങ്ങളാണ് അതിനെ ഇൻഫ്ലുവൻസ് ചെയ്യുന്നത്. by expectations about future input cost. If you are expecting, that is investment is influenced by future input costs, our expectations about future input costs. If we are expecting that in future the input is the cost of input is going to increase, at present, in the present situation we will be having more investment. And the demand, of course, for a particular good, if we forecast that the demand for that good increases in the future, then at the present the investment for that good will increase. So this is what the basic concept about what is marginal efficiency of capital and how it is determined. So we are going deep into the topic. This theory suggests investment will be influenced by. So according to this theory, the theory of marginal efficiency of capital, it says that investment will be influenced by two important factors. The first one is that the marginal efficiency of capital and the interest rate. So presently we are discussing about investment. So investment is influenced by marginal efficiency of capital and interest rate. So generally a lower interest rate makes investment relatively more attractive. If the interest rate is much low, അല്ലെങ്കിൽ പലിശ നിരക്ക് വളരെ കുറവാണെങ്കിൽ it positively impacts investment. എന്താണ് കാരണം? What's the reason for that? When the interest rate is low, people will not be saving their money and they will be investing it. If the interest rate is more, what they will do is that they will save the money in the bank account and they will be earning interest apart from investing it in the market. So if the interest rate were 3%, then firms would need an expected rate of return of at least 3% from their investment to justify the investment. എന്താണ് ഇവിടെ നമ്മൾ പറഞ്ഞു വന്നത്? For example, if the interest rate is 3%, if the interest rate is 3%, so there is an option in front of an individual, he should invest or he should save. The interest rate is 3%. So what he will do, in order to invest, he should get a return more than 3%, only at least 3%. Then only he will be investing his money. If the interest rate is 3% and the rate of return that he expects from investment is only 2%, then of course he will go for saving, because he can earn 3% interest. When he goes to investment, he can only earn 2%. So the interest rate and marginal efficiency of capital are the two factors that determine that influence investment. Why are interest rates important for determining the marginal efficiency of capital? So the next question that we are dealing is, why are interest rate important in determining the MEC, marginal efficiency of capital തീരുമാനിക്കുന്ന കാര്യത്തിൽ എന്തുകൊണ്ടാണ് ഇൻട്രസ്റ്റ് റേറ്റിന് വളരെയധികം പ്രാധാന്യമർഹിക്കുന്നത് എന്ന്? So to finance investment, firms will either borrow or reduce saving. സോ ഒരു ഇൻവെസ്റ്റ്മെൻറ്റ് നടത്തണമെങ്കിൽ ഒരു ഫേമിന് എന്ത് ചെയ്യണം? ഒന്നെങ്കിൽ ബോറോ ചെയ്യണം, അല്ലെങ്കിൽ അവരുടേതായ സേവിങ്സിൽ നിന്ന് എടുക്കണം. It's not only dependent on firms. For example, for an individual too, if he needs to invest, either he will have to borrow or he will have to reduce his savings. അതായത് അയാളുടെ സേവിങ്സിൽ നിന്നൊരു ഭാഗം എടുത്തുകൊണ്ട് അയാൾക്ക് എന്ത് ചെയ്യാൻ കഴിയുകയുള്ളൂ? ഇൻവെസ്റ്റ് ചെയ്യാൻ കഴിയുകയുള്ളൂ. If interest rates are lower, ഇൻട്രസ്റ്റ് റേറ്റ് കുറവാണെങ്കിൽ ഇറ്റ്സ് ചീപ്പർ ടു ബോറോ. ഇൻട്രസ്റ്റ് റേറ്റ് കുറവാണെങ്കിൽ എന്താണ്? ഇറ്റ്സ് ചീപ്പർ ടു ബോറോ, ഓർ ദിയർ സേവിങ്സ് ഗിവ് എ ലോവർ റിട്ടേൺ, മേക്കിംഗ് ഇൻവെസ്റ്റ്മെൻറ്റ് റിലേറ്റീവ്ലി മോർ അട്രാക്റ്റീവ്. അപ്പോൾ ഇൻട്രസ്റ്റ് റേറ്റ് കുറവാണെങ്കിൽ അയാൾക്ക് ബാങ്കിൽ നിന്ന് ബോറോ ചെയ്യാൻ, if he goes to the bank for borrowing, it will be beneficial for him. Also, if the interest rate is low, rather than saving it in the bank account, he might invest it in the market and he can earn more profit. That's how interest rate determines marginal efficiency of capital. Okay, MEC depends on two factors. In the last slide we discussed about two factors that influence investment. That was marginal efficiency of capital and interest rate. Now we are going deep into marginal efficiency of capital. So the two factors that marginal efficiency of capital is dependent on are, the first one, prospective yield of the capital asset. We'll be discussing in detail what does it mean. The second one is supply price of the capital asset. ഈ രണ്ട് ഘടകങ്ങളാണ് എന്ത്? MEC, marginal efficiency of capitalനെ തീരുമാനിക്കുന്നത്. So what is MEC? MEC is the ratio of these two factors. MEC ഈ രണ്ട് ഫാക്ടേഴ്സിൻ്റെയും റേഷ്യോ ആണ്. So what is the prospective yield of a capital? It is the total net return from the asset over its lifetime. Total net return from the asset over its lifetime. ഒരു ക്യാപിറ്റലിൻ്റെ, ഒരു മെഷീനിൻ്റെ കാലാവധി എന്ന് തീരുന്നുവോ, അതിൻ്റെ എക്സ്പയറി ഡേറ്റ് എന്ന് തീരുന്നുവോ, ആ കാലത്തിനുള്ളിൽ അയാൾക്ക് ആ മെഷീനിൽ നിന്ന് ലഭിക്കാൻ സാധ്യതയുള്ള വരുമാനത്തിനെയാണ്, റിട്ടേണിനെയാണ് we call it as prospective yield of a capital asset. So what is prospective yield of a capital asset? The return that he expects to earn in the lifetime of that capital. Okay, the capital, be it a machine, and the machine as per the company says it works for 15 years, and after 15 years you will be having to replace it, or you will have to throw it into the waste. So what is the expected return that an investor gets from that machine in its lifetime? That's what we call it as prospective yield of a capital asset. The next one, supply price of an asset. So this is the second factor that influences MEC. The supply price of an asset, what is it? It is the cost of producing a brand new asset of that kind. So what is the supply cost of an asset or a capital? What does it mean? It means that the cost that is required to produce a brand new machine or a brand new type of that same commodity, that same capital, and not the supply price of an existing asset. And it's not the supply price of the existing asset. For example, we have a machine, and what does the supply price of that asset, that machine means? How much it will be cost, how much it will cost in order to buy a new machine of the same kind. That's what supply price of an asset. And it's not the supply price of an asset doesn't mean that what is the cost that we get if we sell the present commodity. It's not that. It's the cost that we will have to give if we are producing or purchasing a new machine of that sort. Thus it is referred to as the replacement cost. So the supply price of an asset is also referred to as replacement cost. So now we are going into an example. If the supply price of a capital is rupees 20,000, that is the price that will be the price for a new machine or a new capital, and its annual yield is rupees 2,000, and its annual yield, that means per year the profit, the return that we are expected to earn is, what is this? It's 2,000 rupees. Then the marginal efficiency of this asset is, so how we will calculate the marginal efficiency of this asset? It is 2,000 by 20,000 into 100, and the answer is 10%. So here the MEC, marginal efficiency of that capital, is 10%. Thus the marginal efficiency of capital is the percentage of profit expected from a given investment on a capital asset. So what is marginal efficiency of capital? It is the percentage of profit that you expect from an investment. The percentage, it's not the amount of profit, but it's the percentage of profit that you expect to earn from that investment. So as we said that this concept was put forward by John Maynard Keynes, and what Keynes tells about MEC, marginal efficiency of capital, in his book. Let's go through that sentence. എന്താണ് കെയ്ൻസ് ഇതിനെക്കുറിച്ച് പ്രോസ്പെക്റ്റീവ് യീൽഡിനെ, മാർജിനൽ എഫിഷ്യൻസി ഓഫ് ക്യാപിറ്റലിനെ കുറിച്ച് പറഞ്ഞത്? കെയ്ൻസ് പറയുന്ന ആ വാക്കുകൾ അതുപോലെ നമ്മളിവിടെ കോട്ട് ചെയ്യുന്നുണ്ട്. ലെറ്റ്സ് ഗോ ത്രൂ ദാറ്റ്. കെയ്ൻസ് റിലേറ്റ്സ് ദ പ്രോസ്പെക്റ്റീവ് യീൽഡ് ഓഫ് എ ക്യാപിറ്റൽ അസെറ്റ് ടു ഇറ്റ്സ് സപ്ലൈ പ്രൈസ്. കെയ്ൻസ് എന്തിനാണ് റിലേറ്റ് ചെയ്യുന്നത്? ദ പ്രോസ്പെക്റ്റീവ് yieldഓഫ് എ ക്യാപിറ്റൽ അസെറ്റ്, അതായത് ഓരോ വർഷവും അതിൻ്റെ ലൈഫ് ടൈമിൽ നമുക്ക് എത്ര yield ലഭിക്കുന്നുണ്ട്, റിട്ടേൺ ലഭിക്കുന്നുണ്ട്, അതിനെയാണ് നമ്മൾ എന്ത് പറഞ്ഞത്? പ്രോസ്പെക്റ്റീവ് yield ഓഫ് എ ക്യാപിറ്റൽ അസെറ്റ്. So what Keynes does is that he relates the supply price and prospective yield of a capital asset and defines MEC as, how he defines MEC? He defines it as the rate of discount. The rate of discount means MEC, marginal efficiency of capital, which would make the present value of the series of annuities given by the returns expected from the capital asset during its lifetime to its supply price. Lifetime equal to its supply price. So how does he explain MEC? He says that MEC, that is the rate of discount which would make, it is that amount which would make, or it is that percentage which would make the present value of the series of annuities given by the returns expected from the capital asset during its lifetime. It's a big sentence. What does it mean? It means the prospective yield of a capital asset. That is the sentence present value of the series of annuities given by the returns expected from the capital asset during its lifetime. The whole sentence just means that prospective yield of a capital asset equal to its supply price. So we'll just go into that equation, then it will be more clear. അപ്പോൾ ഈ ഇക്വേഷനിലേക്ക് പോയാൽ നിങ്ങൾക്ക് ആ പറഞ്ഞത് എന്താണെന്നുള്ളത് കൂടുതലൊന്നുകൂടി ക്ലിയർ ആകും. നമുക്ക് ആ സെൻറ്റൻസ് കറക്റ്റ് അതുപോലെ മലയാളത്തിലേക്ക് ട്രാൻസ്ലേറ്റ് ചെയ്യുക എന്നുള്ളത് ബുദ്ധിമുട്ടുള്ള കാര്യമാണ്. ഇഫ് വി ഗോ ത്രൂ ദ ഇക്വേഷൻ ഇറ്റ് വിൽ ബി ക്ലിയർ. This may be put in the form of an equation. So how does Keynes put the above statement in an equation? SP. What does SP means? Supply price, or the cost of the capital asset. Supply price. We discussed about supply price. SP is equal to R1. So what is R1? R1, R2, Rn. They are the prospective yield or the series of expected annual returns, okay, from the capital asset in the years. That is എത്രയാണോ ഓരോ വർഷവും നമുക്ക് ലഭിക്കുന്ന yield എത്രയാണ്, അതായത് പ്രോഫിറ്റ് എത്രയാണ് എന്നുള്ളതാണ് എന്ത് പറയുന്നത് R1 എന്നതുകൊണ്ട് ഉദ്ദേശിക്കുന്നത്. പ്രോസ്പെക്റ്റീവ് yield or the series of expected annual returns. Okay, the number denotes the amount of years. The next one, R1, SP is equal to R1 by 1 plus I. So what is I? I is the rate of discount, or I is MEC. I ആണ് ഇവിടെ എന്ത് MEC, marginal efficiency of capital. So equation എന്താണ്? SP is equal to R1 by 1 plus I. R1 എന്ന് പറഞ്ഞാൽ R എന്താണ്? Prospective yield. What is R? Prospective yield or the series of expected annual returns. So R1 means from the first year, from 1 year what is expected return. If R2 means from the second year what is the expected return, in that sort. Okay, so what is I? I is the rate of discount. This makes the capital asset exactly equal to the present value of the expected yield from it. So what is MEC? MEC equates supply price. MEC equates the supply price, that is the present asset value, capital asset, equal to its present value of the expected yield from it. അപ്പോൾ ഒരു വസ്തുവിൻ്റെ ഒരു ക്യാപിറ്റലിൻ്റെ ഭാവിയിൽ നമ്മൾ എത്രയാണോ എക്സ്പെക്റ്റ് ചെയ്യുന്നത് അതോടൊപ്പം അതിൻ്റെ ഇപ്പോഴത്തെ വില എത്രയാണ്, അതിനെ രണ്ടിനെയും ഇക്വേറ്റ് ചെയ്യുന്ന സഹായിക്കുന്ന ഒന്നാണ് എന്ത്, സഹായിക്കുന്ന ഫാക്ടറാണ് എന്ത്, റേറ്റ് ഓഫ് ഡിസ്കൗണ്ട് എന്ന് ഈ സ്റ്റേറ്റ്മെൻറ്റിൽ പറഞ്ഞ, അല്ലെങ്കിൽ മാർജിനൽ എഫിഷ്യൻസി ഓഫ് ക്യാപിറ്റൽ എന്ന് പറയുന്ന ഈ ഒരു ഘടകം, ഫാക്ടർ എന്ന് പറയുന്നത്. സോ വാട്ട് ഡസ് കെയ്ൻ സേസ് ദാറ്റ് marginal efficiency of capital or the rate of discount, that as he said in the statement, is what it equates between the supply price and the prospective yield over its lifetime. It equates the supply price. Supply price means the present cost of that capital in the market, and prospective yield means its expected returns over its lifetime. So using this marginal efficiency of capital we can equate between these two. That's what Keynes has said. Sometimes there might be some confusions, but if you go through the video again and again and read through the lines, I think it will be clear for you. Let's go to an example. The lifetime of a capital asset N is 2 years. Okay, we are given an example. Some of the factors are given. The lifetime of a capital asset is 2 years. That means if you are purchasing a capital, it will have only a lifespan of 2 years. 2 വർഷത്തേക്ക് മാത്രമേ ഒരു മെഷീൻ നമ്മൾ വാങ്ങുകയാണെങ്കിൽ ഉപയോഗിക്കാൻ കഴിയുകയുള്ളൂ. The second one, the supply price of the capital asset is rupees 3,000. അതായത് the supply price of that capital is 3,000. If you are purchasing a new machine at present, we'll be having to pay rupees 3,000. The expected yield from the asset at the end of 1 year. At the end of 1 year, the expected yield, ഒരു വർഷം അവസാനിക്കുന്നതോടുകൂടി എത്രയാണ് നമ്മൾ എക്സ്പെക്റ്റ് ചെയ്യാൻ കഴിയുന്നത്? The expected yield is rupees 1,100. The expected yield from the asset at the end of second year, end of the year 2, 2 വർഷം കഴിയുമ്പോൾ അതിൽ നമുക്ക് ലഭിക്കുന്ന yield എത്രയാണ്? 2420 രൂപയാണ്. ഓക്കെ, the MEC or the rate of discount is 10%. അത് നമ്മൾ 10% ആയിട്ട് we are considering it as 10%. Okay, fine. So the equation is, since SP is equal to R1 by 1 plus I plus R2 by 1 plus I the whole square. The square denotes that it is the second year. So എന്താണ് SP എത്രയാണ്? How much is SP? It's 3000 is equal to 1100 by 1 plus 0.1, that is 1.10. The same after that, R2, how much is R2? It's 2420 by 1.1 the whole raised to the whole square. And finally, if you use the calculator, the final answer that you will be getting it as 3000 is equal to 1000 plus 2000. That's what we'll be getting as the final answer. That's how we are able to prove Keynes equation. In this way, discounted prospective yield of capital asset can be brought into equality with the current supply price. Okay, as we have done in the example. This, so what? Investment will take place only if the net prospective yield of a capital asset is greater than its supply price. From this equation we should also understand one more thing. എന്താണ് ഇതിൽ നിന്ന് ഈ ഇക്വേഷനിൽ നമുക്ക് മനസ്സിലാകുന്ന കാര്യം? അപ്പോൾ എപ്പോഴാണ് ഒരു ഇൻവെസ്റ്റ്മെൻറ്റ് നടക്കാനുള്ള സ്കോപ്പ് ഉണ്ടാകുന്നത്? സോ വെൻ വിൽ ആൻ ഇൻവെസ്റ്റ്മെൻറ്റ് ടേക്ക് പ്ലേസ്? ഓൺലി ഇഫ് ദ നെറ്റ് പ്രോസ്പെക്റ്റീവ് yield of an asset, only if the net prospective yield of an asset. എന്താണ് net prospective yield? What does it mean, net prospective yield? It's the yield that we expect to get over the years, that is the return, that is the profit that we expect to get over the lifetime of that capital or machine, is greater than its supply. So investment will take place only when this expected profit is more than its supply price. Okay, ഇവിടെ നമ്മൾ but here we equated. Why did we equate supply price is equal to R1 by 1 plus I? We equated it with the help of MEC. So when we remove MEC out, that is marginal efficiency of capital, take outside, then investment will happen only if the R or the prospective yield is more than the supply price. So here's the graph for marginal efficiency of capital. On the x-axis we know that it's the quantity of investment. On the y-axis it's the interest rate. A cut in interest rate from 5% to 2% will increase investment from 80 to 100. If the interest rate in the market is decreased from 5% to 2%, what will happen is that the quantity of investment will increase from 80 to 100. Okay, investment അത്തരത്തിൽ കൂടും. Interest rate കുറയുമ്പോൾ investment കൂടും. The alternative to investing is saving money in a bank. അപ്പോൾ ഇൻവെസ്റ്റ് ചെയ്യുന്നതിൻ്റെ മറുവശം എന്താണ്? ഒന്നെങ്കിൽ ഇൻവെസ്റ്റ് ചെയ്യാം, അല്ലെങ്കിൽ the other side of investing is that we'll be saving the same amount in our bank account. So that is, saving money in a bank account is the opportunity cost of investment. അപ്പോൾ ഇൻവെസ്റ്റ്മെൻറ്റിൻ്റെ opportunity cost എന്താണ്? Saving money in the bank. If the rate of interest is 5%, then only projects with a rate of return of greater than 5% will be profitable. അപ്പോൾ rate of interest rate 5% ആണെങ്കിൽ, then only projects with a rate of return of greater than 5% will be profitable. അപ്പോൾ ഏതെല്ലാം പ്രൊജക്റ്റുകൾ ഇൻവെസ്റ്റ്മെൻ്റ് ആണ് നമുക്ക് പ്രോഫിറ്റബിൾ ആവുക? When the interest rate is 5%, if the investment gives anything more than 5% will be profitable. Okay, I think it's clear for you. Let's go through the factors that determine MEC, marginal efficiency of capital. We have short run factors and long run factors. So what are the short run factors? The first one is expected demand. എത്ര ഡിമാൻഡ് ഉണ്ടാകും എന്ന് നമ്മുടെ expectation. If the demand for the product is expected to be high in future, ഭാവിയിൽ ഒരു വസ്തുവിൻ്റെ ഡിമാൻഡ് കൂടും എന്ന് നമ്മൾ എക്സ്പെക്റ്റ് ചെയ്യുകയാണെങ്കിൽ, the MEC will be high, marginal efficiency of capital will be high and the investment will increase. എന്തുകൊണ്ടാണ്? ഒരു വസ്തുവിൻ്റെ ഡിമാൻഡ്, if the demand for an commodity will be increasing in the future, will be having more investment in the present condition. So because of that, the marginal efficiency of capital will be more. The second factor, cost and price. If the costs are expected to decline and if the price are expected to increase, the expectation of the producer will go up. മുകളിൽ പറഞ്ഞതുമായിട്ട് same related ആയിട്ട് തന്നെ വരുന്നതാണ്. I hope that it's clear. The second point is also clear. It's related to the first one, the expected demand. Here the cost is decreasing and the price is increasing. Even though so in such conditions too, the MEC, the expectation of the producer will go up and he'll be making more investment. The third one, propensity to consume. If the propensity to consume is more, then the volume of investment will be more and vice versa. If MPC, marginal propensity to consume, is more, then what will happen is that the volume of investment will be more and also vice versa. If MPC is low, propensity to consume is low, efficiency of capital or the volume of investment will also be low. The fourth one, changes in income. If there is an increase in the level of income, then investment will increase. If there is a decrease in the level of income, investment will decrease. The fifth short run factor is that current state of expectation. So what we expect, if we have a positive expectation for the future, then investment will increase. If we have a negative expectation for the future, then investment will decrease. In the last slide, we are going through the long run factors. What are the long run factors? Population growth. So if the population is growing positively, then we will have to make more investment, and if the population is decreasing, we will be having to make only less investment. The second one, development of new areas. If we expect new areas to develop, then of course the investment will increase. As we all know, when government orders for new special economic zones, then the investment in the nation will increases, isn't it? The third one, technological factors. If you are expecting 5G, then the investment for 5G mobiles in India will increase. If we are not expecting the government to introduce 5G in India, then there will be no investment. Okay, fine. The fourth point, productive capacity of the industry. The fifth one, level of current investment. These are the long run factors that determine marginal efficiency of capital. Okay, I hope that all the topics the concepts are clear to you. If you have any doubt, you can contact me through my mail or through my WhatsApp number. It's given in the channel. Hope everything is clear. I would ask you to subscribe my channel, like and share the video if you liked. Okay, also the suggestions for the topics that you would like to hear. Thank you. See you in the next video.